Hello, Warriors. Hope everyone handled Fed Day. It was a good day for them. How you doing, Ingmar and Mike and Steve, Blake? I, got about 4 minutes before the hour. I saw the message. Anyway, hi. How are you? AJ, James came in. I don't think Ryan's here today. Hugo, how are you? Kyle Barnum, welcome to F.A.C.E. Are you new? Yeah, I saw. I am too. I think everyone should do it that's in F.A.C.E. if they're on X. They should stream our webinar. What do you think, Blake?
Oh yeah,
Huh?
absolutely.
Isn't that a good
Abs
idea?
Absolutely. Yeah. How
So
you doing
that
today,
means
Coach?
it's going good, you know, going good. So let's talk about the markets. Oh, mostly on X, Kyle? Okay. Did you take the long Canada trade yesterday near the close of F.A.C.E.? Anyway, who did take advantage of that long Canada trade, long the dollar trade? I think someone said they did. Yeah, there it is. Chat. Okay, here's a cookie. You took the long euro trade? Okay, good, Mike. I'm glad you found someone better to copy. Astra, good, man. All right. So let's talk about what's happening here today. Okay, let's start with the yen. So I'm going to go to Mr. Yen here at ForexAnalytix, and everyone knows who that is, right? Yeah, I'll give you a hint. His nickname starts with a K. Anyone know? Good morning, K-Man.
Morning, Dale. Morning, everybody.
I guess the
Too
clue
much
wasn't
honor, mate. Too much
uh,
honor.
too
Too much
much.
honor.
You think the clue wasn't good enough?
Yeah. Michael, yes, Kardashian,
Anyway, we had the big break from last Friday, and I'm taking a shot here, uh, just based on the fact that it could be a failing rally.
right.
Um, and not risking a lot, just probing it here in case it fails. And you really, you have also it's a pretty tight stop. I mean, you could risk the highs. Um, so what are you doing? Anything with yen crosses on this
Yeah,
move today?
yeah, I was long sterling yen from last night. Just actually let it go right here. Because I've got some other sterling longs. And yeah, with that 145 ahead of us in dollar yen, perhaps just good to take some off. Um,
Is this a trade deal that Cable's popping on?
and you know what? I mean, it's been a bit of a mix there, right? There's been dollar buying back, a bit of uncertainty about exactly what is going to be announced, but then now we had a very undovish Bank of England. They actually voted 5-4, where we were expecting an 8-1 vote, like 8 for a 25 cut and 1, maybe even 2 for a 50, but it turned out to be a 5-4 vote. And Bailey actually saying right now on the press conference that he was even uncertain to vote for a cut. So two went for a 50, Taylor and Dingra. Dingra usually does it, but then two others they went for a hold. So that was quite an undovish Bank of England as well. So there's the sterling bounce.
Yeah,
I still think sterling is looking pretty okay, whether it be for the deal or even in general. Before even we had the Bank of England, sterling
yeah.
crosses doing all right. So yeah,
Well, I mean, it worked off this overbought condition the most bullish way it can by not
yeah,
giving up a big
mhm,
retrace, just
absolutely,
sideways, and now we're not overbought anymore.
absolutely. The thing is now, if you look at purely cable, it would be good if we start to get back above 133, 55, 60.
Yeah.
Then there is a decent chance to go and have a look back up in the 134s. Um, but again, I'm a bit unsure about dollars, to be honest.
This would be a perfect example of putting on a volatility spread where you buy a put, you buy a call because it's compressed. It's going to come out of the range one way or the other, maybe twice. Maybe the first breakout's a fake out and does it again, but you're right in the middle of a 150 pip range. And the idea is that the winning side, depending upon which way direction it goes, is going
Mm,
to more than compensate for the side that doesn't, and then you're there. It's called a volatility spread. Anyway,
yeah,
if you
and for
guys
those who
don't know
can,
about it,
for those who can do vol spreads, you can maybe do it. But if you want to do
yeah,
the if you want to do the legs through FX,
yeah.
it's not very cheap. It's
Oh,
not.
really? The options in FX are not, huh?
No, they're not too cheap. I mean, cable is turning around 8% vol. That means that you have to go a little far out if you, for example, if you would buy the 132 and then buy the 134 and a half, you're still looking at about over 1.5 big figure to pay away for 1 month.
Okay.
That
I
is,
was thinking like, a 132.50 put and a 134 call.
yeah, but that's going to cost you a lot of money, Dale. You're going to
Okay.
pay more than 2 big figures away.
Oh my gosh. Okay. Well,
Yeah.
I can't break my piggy bank over something like that.
No,
Anyway,
you know,
all right. Sorry I wasted everyone's time.
no, not at all. But
That-
there is a way. I mean, if there are people doing options around here, there is a way. If you have, like, if you look at for instance at that cable, right? You say that it's building a base, all right? But assuming that you and we are right, because I also think that it's doing all right there, you
Yeah.
actually only buy the call, and then once you get your move up to 134 or above, then you start to fool around with your hedges. That's mostly how I play
Oh,
FX.
okay. Yeah.
So I mean,
All right.
you buy
So you
100.
have a bias at first, and then you use the options as hedging the position once
Yeah,
something's moving your way.
yeah,
All
that's what
right.
I did. That's what I did last week on the Kiwi as well. I mean, when it was down at 59.10 or so, I bought a 59.70. And then once it goes above 59.70, you start to fool around with your nominal, with your amounts. And then you just trade it as a gamma positive position once you're above your level. And
Let Here's a key question for this, or people might want to look into it. Do you do this so that you can sleep at night?
oh yeah,
Does it make it easier for you to sleep at night taking home positions because you've laid off some risk and options?
yeah, and to start with, I usually look for an entry in a currency pair which goes a bit against my against my feeling, and then that makes the option even a bit cheaper. So, and then I'm just placing orders overnight.
Well, many people in the community doing it. I think it's an excellent strategy. Probably you have to be overseas to do it, right? Can you
Yeah, I
do it
was
in?
gonna say that not for
Canada.
US based traders, for anybody outside of
Right.
the US.
There's
That's
another advantage. Okay, first in, first out. There aren't options to lay off risk and stuff here in the US.
Can you not do options on futures, Blake, for
Yeah,
instance?
yeah,
we do, but it's not
liquid.
efficient price wise. It's not
Yeah,
like it's not like retail trading FX where it costs less. I mean, I mean, I could
Spreads
just
are
trade
big.
futures, but it costs an arm and a leg to trade,
really.
currency futures,
Mm,
unlike Thinkorswim. Yeah.
Yeah, and
okay, okay.
it does. The IMM doesn't have the same kind of liquidity anyway. Even at its peak when I was down there, it was pretty good. I mean, it was pretty wild and was in the end pit on the IMM CME. So, but now, yeah, it's this is the game right here, retail FX. If you want to trade currencies, it's the best out there. But if you're out overseas, you ought to, if you want to learn, I know that K-Man's a coach here, and if you want to learn about a new strategy, that's the guy you can learn from. Ryan does this kind of stuff too. Anyway, just thought. Um, Looking at Canada, it looks pretty good, don't you think? Uh, it looks stronger. It went from looking weaker than the dollar. Remember, before my interview or the interview talked about this three drive down here. Then it came out. It started to go after the Fed. So looks okay. I mean,
It's actually pretty how shall I say pretty noteworthy that the Canada is behaving much weaker than MEX, for instance, if you think
yeah,
about the USMCA. But yeah, I mean, we spoke about that big support zone in the dollar
yeah,
CAD, right? And I spoke about it for those who would have missed it. I actually spoke about it on the Flow Show again this morning. Or for that big support zone in the dollar CAD down there.
yeah. So it looks stronger than the dollar, and the dollar kind of broke out of this little blue line. Still holding it. Um, I don't want to fade the dollar yet. I don't want to short it. I still think there's I'm not talking about a huge squeeze, but they should be able to squeeze them to 101. All the dollar bears out there. So we'll see. And metals, we're getting closer. All right, we need to get up here, right, Blake? To get this third drive, and I was thinking about it. We did have risk off on these two events, so we'll see. We're
But
up pretty
yeah, I mean,
strong today.
it's moving up even as risk is firm right now.
Yeah, so
Yeah.
it's acting a little different here
I
than it did.
I I don't know what to do with gold, but I would say that I wouldn't want to be short.
No,
So
that's the thing is those correlations. You can look for correlations, but 10 minutes later they're out of the window. I think.
especially with gold, who has a bearish argument for gold? I mean, I don't know if there is one at
Mm,
this moment.
no, but you know
It
what they say, Blake.
I can't take.
When
You know
everybody's
what?
bullish, when everybody's bullish, that's when it gets dangerous, right? But
Yeah,
When you look at it, I have one. When you
okay.
look at it in the sunlight, it has too it has too much glare.
uh,
Well,
So sell, get rid of all your bullion here. Go ahead, Blake.
I've been in that camp for a while, like ever since we were maybe sub 3,000. I'm like, man, it's so like there's no reason to be bearish, but I've felt that way for a long time and it hasn't stopped. I mean, it
Well,
just
change your mind because that may have been a failing rally yesterday.
I,
you
I
think
was
so?
Yeah.
Yeah, but no, but I was saying this morning, I think even though we don't expect a solid framework or whatever for the US-China talks over the weekend, I would suspect that come Monday, the Asians will have something to do in gold, for instance. Because they will know how she and he and whatever their names, the other names are who are going to attend. I think actually PBOC's PAN is expected to be part of the Chinese delegation. That's very interesting as well for the CNH. But I guess come Monday we will have another leg,
So
whether it's
what do you think of our president's strategy that they finally were able to get this meeting to talk about whether they're going to have a meeting?
took them long
And
enough to
then
find their
and then
phone.
yesterday he reiterates that he's not going to move the tariffs. He's not going to lower them.
Yeah, that's what Besant says. Create enough uncertainty to it's a negotiation if that they're doing. I mean, Yeah.
I mean, you're flying to Switzerland to do this, right? And you just want to have things defrost, and less than 24 hours before you're going to be there, the president says, "I'm not lowering them anyway."
Yeah, well, I mean, we will see about it. But the Chinese have
I
already
don't
made
know.
clear. The Chinese
Feels
have,
like a twilight, like the outer limits to me.
yeah, but the Chinese have
Anyway,
already made clear today that if they don't abolish some of those reciprocal tariffs, that there is not going to be a deal. So,
And
yeah.
speaking of which, Dale, do you mind if I take
Oh
over real
no,
quick?
no.
Okay.
I know I've been blabbering.
No. Well, there's some comments, and I have to. There's a lot of comments flying around. You're speaking about China, and China and Russia are doing this like joint, uh, you know, um,
wow.
press conference right now, and they exchanged over 20 cooperation documents. The China's Xi says China Russia should be true friends of steel. And I was just saying in the chat room, like with these comments here, these are very wartime type of comments. And then the other comment, China Russia's sign agreement on global stability, biosafety, blah blah blah, whatever that means. We were laughing about that, but Russia's Putin says China Xi and Putin are convinced that removing the root cause of Ukraine's conflict is necessary to resolve it. Russian agencies cite joint statement. What do you think they mean by that, Dale? Like, what is the root cause of Ukraine conflict? Who
Well,
are they
they
referencing?
say Putin's been saying since the onset, denazification. So, they fought against each other in World War II. Okay. Ukraine was was an ally of Germany. So, there's been, harbored grudges from that. Um, so I think that's the rationale they're using.
All right. Well, I
Okay,
this.
NATO on their doorstep, but yeah, no one's going to allow Ukraine in NATO, and NATO's falling apart anyway. Why is he making a big deal out of it?
I don't know, but I don't like this joint communication between China and Russia, and I
Yeah,
think gold. Just I was looking at further reasons for gold to maybe firm up here, but I want to talk a little bit real quick about the euro sitting on support. Sterling is catching a bid following the Bank of England. People are like, I mean, when I went to bed last night, I was talking to K-Man about this. When I went to bed last night, there's the New York Times headline said, "Hey, it was literally just a headline that said, there's a trade deal with the UK, and that was it. And then, this morning, the UK officials are citing that there's just, an outline. And I think this big hoopla, obviously that, Trump wants to do is just going to be just that. It's just for show. The market's already kind of discounted it, said it's just an outline. But Sterling's up because of what K-Man said a little bit earlier. It's really the more hawkish Bank of England decision right now, and that's got Sterling
yeah,
rallying.
juiced. It's
Yeah, real,
juiced.
real. I mean, even Michael Brown, and for those of you that don't know, Michael Brown from Pepperstone, he's in our chat room. And when the headlines were flying this morning, wherever it was, it's when I got up this morning. So he's like, this is Michael Brown. He's like, man, that was a lot more hawkish than expected, and that's really got Sterling, turned up right now. So I think
Yeah,
you got to watch it because you got to watch this channel because we got a little false breakdown there, but we're holding well above 132. There's a good chance we could trade up to 134 today, especially I know we as FX traders already kind of look through all of the news flow over the last 24 hours as far as yes, there's going to be a potential outline framework of a UK US deal, but that doesn't mean that when the pump rally at 10 a.m. or is it 10 a.m. Eastern? I believe. I think it's 10 a.m. Eastern. When that announcement is made finally by the Trump administration, you might get another juice sterling move, and might take us all the way up to 134 today. So I think that's something to be paying attention to as we go into trade today. And Dale, you were talking about the Canadian. And yeah, I think K-Man and I yesterday were talking about really important support at 137.10, which is a 78% retracement of, this entire move. We never quite reached for it, but you're right in pointing out that the dollar is a lot stronger against the Canadian, or you can actually just say the Canadian is actually very weak against a lot of different currencies. The euro CAD is getting a lift here too, which I think is a very bullish pair to be paying close attention to. Talked about it on the trade-off show last night with Chris
looks
Weston.
like it could have another trip above those highs.
Yeah, I think it could. I was hoping it'd get a little bit lower. I was
Go
hoping
up to your blue line again.
Yeah, I was hoping it was more like this. This is what I
Yeah.
was hoping for. I was hoping it was like this and like
That's
this.
fine. Oh,
Yeah, but I don't
yeah,
know if
yeah.
it's gonna make it down there now.
Yeah.
It's kind of like one of those trains. It's kind of leaving the station without me, and I'm like, oh
That's
crap.
still a nice formation like that too.
Yeah, I
At
think it.
that angle,
I don't
I almost like it more than a parallel because it
like a what?
shows
Then
than parallel channels because it shows compression
the
and it
ascending
gets a
wedge type of
wedge.
thing. Yeah,
Yeah, I like wedges.
like
I
we can
don't
do.
wear the shoes, the wedges.
You
And
know,
I've thrown my wedge.
Women wearing wedges, you mean?
Oh, no, I think the men used to wear them too.
my grandmother,
Oh, those are clogs.
my Chinese
Yeah.
grandmother had her toes pinned back when she was a
Wow.
kid.
Oh,
Yeah,
yeah. They have
because
dainty feet is
dainty feet, which is
yeah,
yeah, it's crazy, right? She
yeah.
used to wear wedges. Anyway,
It's a Meshuggah the world.
yeah, it's horrible. So today I think Ryan's on a meeting. He's actually doing a Forex Analytix potential partnership meeting with a technology developer right now. I think that's where he's at. Which
No,
is
not really.
what's that?
No, he's at another appointment. But anyway, yeah, he's at
at
the
I'm
the
here.
No,
no,
not you,
no.
Steve. But
Ah,
good to have you here. How you doing, Steve? No, I was talking about Ryan. But Steve, how are you doing? What do you have to say about anything and everything?
it's a little bit of a very general question.
Yes, it is. All right, give us your opinion on equities where they currently stand, because we've had this nice rally back in the S&P. We're still stalling around the 618 retracement. We're ahead of the 200 DMA. The markets are still holding up very well, but very much in a range, even following the Fed yesterday. Any thoughts on where
Yeah, this
risk?
5680 level in the S&P is still acting as a resistance, but I have to say that equities, have behaved much, much better than I would have expected. I obviously didn't expect equities to produce lower lows since, the government reversed on, the trade war part. But on the other hand, I didn't expect that equities would be likely to reclaim the all-time highs. And I still believe that's the case. I believe that there are still pending issues and worries, right? And although I don't believe that the US government is going to attempt again to re-escalate the trade war, I don't think that US equities will find it easy to climb to new all-time highs from here. On the other hand, European bourses, I mean, the DAX is at all-time highs,
Yeah.
and the FTSE is, trying fast to catch up as well. So, between the two of them, I would remain overweight European equities for the time being.
Yeah, that's definitely something that's been predominant since the since the beginning of the year, and it's something that we talked about at the end of the year. It's like, hey, the U.S. equity markets will continue to underperform, and that they have.
But just keep in mind, go back to that chart, please, and you'll see that just because you're buying the relative strength leader, it can still be vulnerable. Look at how it broke. It broke 20-30%.
Yeah, that's that's the thing when you do like a pairs trade and you're buying S&P or shorting S&P
Yeah,
and buying the DAX, you can still lose money
yeah,
on the one that's underperforming. It's
yeah,
an outperformance type of situation. Or if you're long both
right.
and you lose
You have to look at
And
it. It's not a trade. It's kind of like a
like a
position.
hedge, like a
and
hedge.
needless to say, after the recent jitters, right? Anything new that might come up that can shake the market confidence is definitely going to produce a very decent move to the downside. So there is definitely vulnerability here.
Yeah. Yeah, there is. Hey, Steve, real quick, since you obviously you're in Athens, Greece. How do you feel about the euro where it's currently at, or the dollar overall?
I think that the dollar in the short term remains vulnerable. It's currently testing, it's been testing mostly during the past several days. A confluence of resistance is at 115, and the risk reward is in favor of being short as long as that resistance is holding. So the risk reward currently is nice to be short the dollar and long the euro. But if the dollar breaks higher from here, then it opens the door for a bigger rebound. Now, fundamentally speaking, the situation with the dollar is rather complicated, right? First of all, because there are a lot of unanswered questions having to do with the US policy, right, and Trump's intentions. So that's thing number one. Number two, there is a lot of confusion due to conflicting messages that we get out of the US. For example, Trump still claims that he wants a strong dollar policy, that he wants a strong dollar, but on the other hand, he's doing the utmost to put pressure on Powell to cut rates aggressively. So, obviously both can't happen at the same time. You can't both aggressively wanting much lower rates and claim that your policy is a strong dollar policy.
Right, right. Very, very, very good points. Very good points. It's going to be interesting to see if the dollar continues to weaken here. I mean, it feels like just the lack of confidence in dollars and owning dollars. It's amazing, especially when you see the stock market actually roll over and when you see some selling come in and the bids just come into the euro. It's pretty fascinating to watch. Hey, look, we're actually 2 minutes away from data, and obviously everybody's paying pretty close attention to this weekly unemployment claims data coming out. So let's go ahead and pull that up.
It might produce some movement. And it doesn't matter for today. I just want to remind you that jobless claims, NFPs, etc., all these data are only to be celebrated the day we get them, because mysteriously, in quotes, it's been years and years now that at some point we go back a year and
Make the major adjustments, you mean?
and make like an adjustment of something like 600, 700,
Yeah,
1 million jobs lower, right?
yeah. Close enough for government work.
Yeah,
Yeah.
and I think for us right now, we're just looking more at the trends. Like last week, we had a really higher print at 240,000. So I think most traders just don't want to see that continue. If it drops back in the 220s or 230, like as expected, that's going to make the market feel
Politely
a little bit
put,
better.
the data are very well massaged, right?
Yeah. Well, data is going to be out in literally
30
about
seconds.
30 seconds. So, hey, as we're waiting for this data, K-Man, what are you looking to trade today? Anything in particular?
Well, I'm a buyer of sterling. If I see any sterling dips somewhere, I still like that. The one that Riksbank and Norwegian Central Bank have not changed their rates. But if anyone looks at the Scandies, I would be, despite oil and energy coming down, I'd look a little bit more positive towards the Norwegian kroner than the Swedish kroner. So I may start to look at something there in the Noki also. I'd love to see a bit of a Noki sell-off and then get in somewhere.
I see that data come out yet. Oh, there it is.
Data
Yeah,
is
see,
out
a
as
little bit better than
expected.
expected. Yeah.
Relax.
228.
Nothing to worry about. Nothing to see here, folks. Move along.
And
All
by
right,
the end of the year, the same number will have been revised to 280. But who cares, right?
Hey, so keep your eye out for, I think it's 10 a.m. Eastern. We're gonna have this bigly, massive, one of a kind, unique trade deal being announced with one of the most biggest economies in the world. So we need to be all ears for that. Remember, it's I think at 10 a.m. Eastern. We're gonna hear
Greek
the
economy producing numbers.
You know what? Let's all get together in a Zoom room and watch it together.
Yeah, that sounds like a great
Put
idea,
a
Dale.
put a
And I'd like
MAGA
to
hat
also
on.
go slip both my wrists and poke all my eyes out. Hey, you know what? You have a really great guest today, Dale.
Oh,
You know,
he's okay.
yeah,
Come on, don't raise expectations and put pressure on Dale.
Well, Dale Briscoe's here, I think. At least he should be
He
here.
is.
Oh,
He's
he
there.
is here. Dale, we miss him on Twitter. It's good to have him here. He's one of the he's a hedge fund manager or you know, family of funds manager. Dale's great to have here, and I'm excited to hear him.
Thank
And
you.
he's one of my favorite guests that you bring along. So make sure you all stick around for Dale.
Thanks, Blake.
Thanks,
Thanks,
Coach. Thanks,
K-Man.
K-Man. Steve.
Steve, good hearing your voice, bro.
Cheers,
Dale
guys.
Briscoe. Dale Briscoe, welcome back. How are you?
I'm good, Dale. Can you hear me?
Yeah, loud and clear.
Perfect. Well, another
So,
good show
wow.
from you guys. Yeah, wow, wow. A
I
lot
mean,
to
you
talk
know,
about today.
from when we were talking, you know, it turned out to be kind of ironic. You came in here worried about me being too bearish on the Mag 7,
Yes,
and you had that beautiful bull flag,
I did. That's a
and
very good
I
memory,
ended up being worried about you.
actually. Well,
Anyway,
there's good and bad, right? So
yeah,
as I keep telling people, having been in the business for 35 odd years now, and having done tens of thousands of trades, statistically, I'm only right about 62% of the time. So you have to
we're
let me off the odd mistake.
okay. I'm wondering if you're going to share some
Yes,
charts.
I am.
You know, if you flipped, if you just you know, got flat and waited for the panic at 4,800, and where you're at now,
Uh,
S&P wise.
S&P wise, yeah, sure. Can you see my
Or
screen?
yeah, we have a couple of oscillators here.
Yeah,
United States real GDP.
yeah, cool.
Okay,
So, let me go through a few things and then I'll
okay.
sort of get into a little bit more detail. So, no, I haven't flipped. The view is the same as before, but things have become a little bit more murky in terms of there's less clarity now. And I think, you know, Powell was going on about that last night. And this all stems back to what's going on in the White House, right? You know, we didn't really have the full inkling of what he was going to do with tariffs last time I was on. Clearly now he's playing hardball, although I think markets are telling him, you know, he's being completely stupid. And I was listening to a couple of other podcasts and just generally speaking, I think the world is confused by what he's doing. And it's a strange way to treat friends, economies that have been friendly towards the US over decades, if not centuries. It's a very strange way to behave, and it's almost like an isolationist policy that he's adopting. And I do worry about what the longer run outcome of all of this is going to be. Not,
Word, some of us are having a hard time hearing you.
Sorry, can you hear me now?
Yeah, thank you.
Sorry. So yeah, it's all a little bit confusing, and I don't think that's going to clear anytime in the next few months. I mean, I hope it does, but I think this could be a longer term issue. But anyway, let's dig into it. So the Fed is in rate cutting mode. They didn't do anything last night, but I think their bias is towards easing. The spanner in the works, of course, is tariffs, and I think it's going to take another several months for that to become clearer. So I don't think the Fed are going to do anything at the next meeting either, because I don't think there'll be any more clarity by then, unless data drops off a cliff, right? If data drops off a cliff or there's some kind of market hiatus, then I think the Fed will be forced to act. But
okay, do you think that 4,800 level panic low is it? A lot of people calling it that was 4. So
yeah.
we completed it, and now we're in 5 to the upside.
Yeah, I think there's a good possibility of that. I think I'd say it's probably 75 to 80% probable. But let's come on to it. So anyway,
okay,
GDP is okay, but it's softening a little bit. So this is what the Fed is looking at. Unemployment rate is gradually creeping up, and there's nothing to worry about at the moment, I don't think, but it's giving the Fed some more ammunition. Average hourly earnings, stable, maybe coming down a little bit. Leading indicators are okay, right around 100. And retail sales, are okay, maybe ticking up a little bit. But consumer sentiment has fallen off a cliff. And just don't forget, this is all coinciding with what's gone on in the last few months since Trump took office, right? This is basically since the end of the year. And on the flip side, inflation expectations have gone through the roof. So you've got consumer sentiment falling dramatically, but inflation expectations going much higher. And this is a real issue for the Fed, a huge issue for the Fed, right? Because it catches them between a rock and a hard place, and they don't know which way to jump right now. And that's why Powell and the Fed are a little bit in the headlights. It's going to take a little bit more time things to play out. Any on whether they or whether they actually need to be raising rates significantly.
Yeah, you're breaking up now, Dale.
Sorry.
Yeah, it's all right. I mean, just letting you know.
I could switch microphones, but maybe I'll just.
All right, I could, I think if you just maybe concentrate on not being how you normally talk, just talk loud, yell at us.
Yell
All
at
right,
me?
so yeah, so okay, this is the
Okay,
10-year yield. This is
yeah,
interesting. I
yeah.
like this. All right.
So this is my view on the 10-year yield, and I
Okay.
think you know my view a long time. We
Yeah.
are said this now since 2020. We are in a generational bull market for
Right.
inflation and yields.
Right.
We've broken a 40-year trend. So it would not surprise me at all that if over the next several years we trade at least 6%, if not 7 or 8% on 10-year yields. People think I'm crazy because the US cannot afford that on the debt, but this is what the charts are saying to me. And I've got us in a big fourth wave triangle, and we have yet to complete the final sort of dance around that. And that could take us another couple of months, right?
So does that take us back, take us back to what, about 450?
About 470.
470. Okay, so just under 5.
Yeah,
All right.
470, and then back towards 4% again.
Yeah. And then look out.
and then
Yeah.
way above 5 in the second half of
Yeah.
the year. That's what I have right now.
I like that
And
look.
yeah, thanks. And then this is German yields, right? This is German 10-year
Yeah.
yields. And again, it's the same picture. It's a 40-year
Yeah.
downtrend. And
The
it's
interest
broken
rate trend is global, right?
in the major economies.
Yeah.
So I've got yields going higher. But the
Okay.
interesting thing for me is the dollar. So if I zoom out a little bit here.
Oh,
This
I'm
is my
so
big,
glad you came with this count because it's something I've been asking myself and traders. You know, like we had that first break that you had labeled 3 with a question mark,
yeah,
and down to A was about 1,400 handles. And
yeah,
then from your blue B, 1,400 handles gets you about 96.
yeah,
And you
exactly.
think this could be a 4
Yeah,
as well. So that would be like ABC for 4, and then you have a huge bull market in the dollar.
yes, that's what I'm thinking.
And you know, I could see this playing out. I know we have another low to make in the dollar, but have you looked at how bearish positioning is? The most bearish positioning is on the dollar in many years.
Yep. No, I
That's going
think
to
it's
be good fuel.
very interesting. I think it's very interesting. It's a nice confluence here.
Yeah,
You've got
96,
this,
30.
you've got this uptrend from
Yeah,
2011. You've
yeah,
got
I
basically a
like that.
38% retracement, comes in at about 98, 99. You've got the
Right.
channel, you've got the A equals C coming in at 96, all within the
Okay.
next week or two. Now,
Yeah.
we could have another low, right? We could have another low in the
Oh,
dollar.
yeah, I
And I
think we
think
will.
that's what people are generally looking for. But what if we don't?
Yeah, that's possible too. Well, I'd say getting back over 102 would prove that.
Yeah, I think probably what I think I would say, yeah, 103. If we get back above 102, 103, I would say we're on our way.
Yeah.
So this to me is a very interesting chart because I think
What kind of economic environment are we going to have with the dollar bottom? Because we're much closer, if this count plays out, to being a buyer than playing the bear side of the dollar anymore, even if there is another 300 points or so in the dollar to the downside. But what kind of environment do you see, Dale, for other asset classes if we're going to have the dollar trade? What was your upside objective for 5? Did you have one?
oh, it's significantly higher, 121.
Okay. What do we have? A massive deflation, the opposite of what everyone's talking about now?
No, actually, interestingly, I think that we're going to get inflation. I mean,
Okay.
that's my core view.
Okay. Higher rates, higher prices,
Yeah,
and with the strong dollar.
yeah.
Okay.
So
Well, that would take the sting out of higher prices in a way, wouldn't it?
nominal prices will be going much higher, but obviously real prices
Right.
will be subject to inflation. So
Right. Okay.
so
Nice look.
so yeah, thank you. So there, coming back to your equity question, I think the reason why I'm only 75 to 80% confident that that we're going to go higher is that there are still some mixed pictures, but I'll come on to why I think my bias is still favoring upside. This is the momentum factor ETF, right? And these are the Momo stocks, so all the usual suspects. And it's dropped substantially in the last, whatever it is, 5-6 months. And you could almost count this as a 5-wave decline. If you're looking at it, you could almost count it as a 5-wave decline. There's a slight tiny overlap there, but that looks like a pretty clean 5 waves down to me. Now, if that's the case, and we're coming into resistance now back at the 61.8, and that's what I always look for is a return to sort of 50, 60%. If we then roll over, that could be a whole world of hurt on the downside again. If we can get back above would say 160, 165 maybe, then I think we're on our way back again and we'll see new highs. But that gives me cause for concern.
So are these stocks in this ETF?
Yes, it's
And what? It's a
exactly.
Mag 7?
It's not Mag 7, but it is big momentum stocks.
Okay. All right. Yeah, they've been weaker than the S&P.
Yeah, exactly.
Yeah.
This is another thing that gives me cause for concern. This is the
Yeah.
stocks, right? Semiconductors.
Yeah.
You could argue that that's a head and shoulders top, right?
Yeah, you could.
Yeah, between these two blue dotted lines, that's a head and shoulders top in there. And if so, we've basically broken the neckline. We're coming back up to retest the neckline from underneath, and then we're, again, a whole world of hurt on the downside potentially. So
Back
so
to
those are
the 22 lows. Is what
yeah,
you're
exactly. Yeah, exactly. You could drop another 30-40% from here, right? But
Yeah.
I don't think that's the case. And the reason why I don't think that's the case, and the reason why I'm somewhat biased, still 80% to the upside, is liquidity. This is the Fed's balance sheet. And people tell me that I can't chart economic indicators. Well, I would beg to differ. This is the Fed's balance sheet, sort of post 2020, right? It just ballooned from about 3 trillion up to about 9 trillion. And we're now, taking a little bit back each month, and we're back down to 6 trillion something. But to me, it just looks like a five-way Elliott wave structure on the upside. And now we're just giving back, 30, 40, 50%. And if you look at the RSI, we're diverging.
Yeah.
And the other thing that makes me think that this is going to end and the Fed's balance sheet's going to increase again is when I start looking at money supply. Money supply to me looks like it's reached a bottom and it's now headed higher again. So when you think about the central bank and you think about money supply, and also the fact that, there's credit spreads are nowhere near what they were in 2020. And they're nowhere near what they were in the global financial crisis. They're very, 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 very muted. So for me, these sorts of things are signaling that I think risk on is still the way to be. And just to look at a couple of other charts, this is your S&P, right? This is quite a pretty chart, right?
It is. I love. Yeah, you ought to
2020
make
lows.
NFTs out of these two.
Yeah, that would be nice, wouldn't it? I think the
Yeah.
market for NFTs is long gone, Dale, sadly. But
Well, we'll do it for a hobby.
we could have made a lot of money. Could have made a lot of money had we done it 2 years ago. But anyway, this
See
is
on
quite
on top of it, I am.
yeah, you are. This is a pretty chart, right? Because you've got the third wave is equal to the first wave. You're still inside the channel. You had a nice touch point. You came back to touch the top of wave one. So this potentially is a wave four bottom. And there's only 3 waves down from the top of this.
Yeah.
It's unlike the momentum ETF. There's 3 waves down. Now, the clear line in the sand for me is about 57.80. We get above 57.80, then I think that even if we then have a pullback, which is what I'm actually looking for, I think over the next few months, we're going to be making new highs. All right. And the reason why I say would do a pullback is we're coming back into the midpoint of the channel. I think, momentum wise, we're beginning to run out of steam a little bit here. I'd like to see another couple of small highs towards this sort of, as I said, 57.5, 57.80 level, and then have a pullback. So do something like this, Oh, let's grab my drawing tool.
What do you think of this? Like, you showed the momentum one was 5 down. This is C. This was 3.
Yep.
So if we have ABC, which is 5,800, if it's a quality from the low to the first high, and then from 5,100, 58 is equality, couldn't that be a B wave? Call the 3 down A.
Yeah.
Call this rally B, and then we get a C that maybe cleans out 4,800, goes to like 45 or so, and
Yeah,
then
on
we
this,
turn?
in my view of the world, if we get that, then I think this whole structure is not what we think it is, in which case you're likely to have a much bigger correction. I mean,
Okay.
substantially bigger, sort of, maybe back to 4,000 or maybe even 3.5. I don't
Okay.
see that right
That's the
now.
end of the bull market then.
It's the end of this leg of the bull market. I mean, don't
Yeah.
forget, if we look in very long-term time frames,
It's
the
always a bull
market,
market.
it's always a bull market. 70% of the time, historically, the market
Yeah.
is up. So, but no, I hear what you're saying. So instead of what I'm thinking, which is, that you might actually, you're suggesting that we've got an A down, a B up, and then a C down, right?
Yeah.
And then that.
Yeah.
Yeah, that's possible, but I don't like that. I think what's more palatable to me, at least anyway, is to have something like this and develop some kind of triangle and then higher, right?
I know
So
some of the bulls are looking for 7,500. They have a Elliott count up there. If that's 4 down
yeah,
there, they're
Mhm.
looking for over 7,000.
Yeah, I wouldn't disagree with that. I mean, I can do a couple of quick measurements. I mean,
Could
if you
that be
like.
over by August?
No, I think that's too soon.
It's going to take more time into next year to
Certainly
achieve that?
later in the year, I would say is probably when we're likely to see it.
Okay.
Right.
Let me ask you about,
So yeah, 72.70 maybe.
okay, last time you were here, you liked the oil over, the oil shares over precious metals, which of course the precious metals exploded. So did the shares. But I'm
Yeah,
talking about now. How about now? I'm sure that it got even more out of whack
yeah,
of oil being very undervalued to gold, just like silver is with the gold silver ratio over 100.
yeah. Let me come on to that in a second because it's a really good observation. Let me just reinforce why I think that market is
Okay.
potentially not as bad as people think it is.
Okay.
Not only do you have the S&P with this kind of picture where you come back to basically test the top of the sport of the breakout from 22. You have it in the financials as well. So here's the broker dealers. They've done exactly the same thing, right? And financials, XLF, it's done exactly the same thing. So when I see financials doing okay and there's no
Financial stress.
there's no financial stress. What we were talking about, the credit spreads, right? There's no real, I don't see that there's any real stresses in the system. Yes, we had a shakeout. I think that was primarily leveraged money. And I don't know if you saw it, I actually wrote a small piece
On that basis trade, Dale?
No, not on the basis trade. It was basically on LinkedIn about a month ago, on Friday, April the 4th. I remember it very well. I wrote a piece saying vol is spiking. The VIX is probably going to get to 60, and that will provide a great opportunity for long-term investors to go and buy risk assets, not leveraged investors, but long-only guys. So pension funds, charities. I'm a trustee. I'm a trustee of a big charity here in the UK. And those are the sorts of moments when you want to be taking advantage of that. So I don't see the stresses in the system. And that's why, the financials.
Well, that's a shot across the bow anyway.
Yeah.
You can't completely discount it because when you look at that compared to, and look left,
yes,
that's a change. And it's not back at the low levels. Maybe it will end up back near the lows, but
it's not.
that to me
You're talking about the VIX, right?
What you were showing before. I don't know the chart before.
The credit spread.
The credit spread. Yeah. See, so I mean, it snapped back the velocity of it, says that something, its character has changed. It seems like to me.
Listen, spreads back down to about 360. If
Okay.
we get above 450,
Yeah.
then I think there's every chance we go to 6. This is on spreads,
Okay.
and if that's the
Because
case,
this could be a 2 in the spread here.
it could be. It could be.
I'm just being Phil Donahue. Every time he'd always say the opposite of his guess. He was the devil's advocate. So now you know who I work for.
Yeah, being non-American, that reference is sort of over the top of my
I
head a little
know.
bit.
Yeah, but I'm sure you have them over there too. Talk show hosts,
No.
No? Okay.
Oh, no, not him. Not him.
Oh,
We
not
we
him.
have
Yeah.
talk show hosts. I don't watch
Yeah.
that sort of garbage on TV, to be
Yeah.
honest.
Okay.
Anyway, these are a couple of other things that, yeah, I know. I'm very outspoken. I'm sorry about that. This is another reason why I think that the market should do okay. You remember we were talking about the stocks, and I was saying, this could be a head and shoulders, and that would be
Yeah.
bad.
Yeah.
When I look at SMH relative to other things, so
Yeah.
semis
That
relative
looks more
to
like a flag.
XLK tech, it looks more like a flag, right? Same with when it
Yeah.
relative to the SPY. It's done what all the other big things have done, which is come back to test its breakout level. So I'm not that concerned. And the other thing is, look, here's commodities, right? This is the CRB. This is CRB going back to 2020, and we're up 200 and odd %, right? And we haven't given much of it back.
No, it's
Over
just been sideways.
the last 2 years, we've basically been sideways. What that says
Yeah.
to me is inflation is not going to go away.
No.
There's still liquidity in the system, and I think we're headed higher on risk assets. So that's bullish,
A
right?
lot higher.
It's
Should
bullish.
have equality to okay,
There's your cocoa.
there's your there's gonna be a third drive up there, the new highs. I
Yeah,
see
or
1,
wave
2,
5.
3.
Yeah,
Yeah.
or wave 5. So that's Coke. These are my two favorite drinks, cocoa and coffee.
You ever mix them?
No. But I
You ever
sometimes
chase hot cocoa?
sometimes have alcohol in them.
You're great,
Look,
Dale. Go ahead, buddy.
you know my favorite charts, right? Here's
Yeah.
Bitcoin.
Oh yeah.
Bitcoin had a big shakeout, but all it's done is come back to test
Yeah.
its breakout. I
So
think we're
where's
going.
5 end? 125?
We could be going a lot higher. I mean,
200?
I used to be a Bitcoin agnostic, right? I used to be agnostic in terms of Bitcoin, but
Yeah.
because the whole inflation landscape has changed in the last 4 or 5 years, and
Yeah.
I think inflation is going much higher, you have to be owning assets that are going to give you some kind of
Hedge against it?
it's not even a hedge, it's just exposure to. You just want an exposure to something that can potentially inflate, and Bitcoin is it, or one of the things, right? So I think it could go much higher. Where's it going? Who knows?
So just be 5 starting. Yeah.
Yeah, it could go significantly higher. I mean,
So new
I see
high
people. So new
150.
highs on Bitcoin, at
Yeah.
least, I would say.
Yeah.
Here's gold, my other favorite. I actually bought some of this overnight. I'm really happy with it. We had a nice pullback.
Yeah,
For
that
me,
was a nice pull.
it's still an
May
uptrend
not be
trend.
done either. What if that was B up there yesterday?
Uh,
What if the
it,
high was
it,
5?
it,
What if
it,
the high
it,
was 5 of them?
yeah,
And now we're in a big 4.
it could be. I think the demarcation point is 3,200.
Okay.
I think below 3,200, and you might need to
We're going to
reconsider.
your lower dotted line.
We've just been to the lower dotted line. We've just been to the lower dotted line. I think we do
Fast.
something. I think we just
Fast.
do something. I think we just do something like this.
If you're right about, and you know what? Blake was saying, Blake's not here right now, but he was saying, or someone was saying, what's a bear case in gold for it to get to 2,700? Well, Dale, it could be that dollar rally that you had up on the screen for a little while. I know they could both go up together,
It could be.
but they could also reattach
It could be.
as well. Dollar could pressure it.
It could well be. It could be a much stronger dollar doing that, but I don't think that kicks in probably for a number of months yet, maybe a number of quarters. And you know how commodities behave, certainly in fifth waves in commodities, they are usually exponential in their moves, and you have blow-offs, which is
Okay.
why, you know, I'm targeting
37.
750, and I think there's every chance that we get there.
Yeah, I
Why
know some
not?
people are, yeah, good.
And so if that's the case, you know, this is the ETF of
Well, let me ask you
gold
this as
gold
a
juniors. It is massively bullish, massively. If you take out 67, 68, I think you can easily go to 80, 90, 100 over the next year or two. You could double in gold miners.
yeah, they look good.
And uranium is my other sort of inflation trade as well, right?
Yeah. Yeah.
This
CCJ
is
is kind of the
CCJ, yeah,
best of breed.
CCJ, Paladin, UEC.
Yeah.
There's a whole bunch of
Do you like
uranium
the
miners that
royalties? Do you like UROY? Do you like royalties in
I,
uranium?
I haven't looked at it, to be honest.
Okay.
Let me just oop.
It really hasn't been participating. There it is, UROY. With and it looks like it could have one more dip. I'm a buyer at 120 if it happens. So anyway,
Yeah, I've not followed it for a while. I've not
okay.
followed it for a while.
All right.
But yeah, so that's kind of where I'm at
All right.
in sort of macro views. Do you have any other sort of questions or
Oh
things you
yeah,
want to
the
talk about?
last one was about oil against gold, that
Oil against gold.
spread.
Yeah.
Because Dale, do you like oil? No, I can't find a bull anywhere in the universe.
I think we're
I
still
think we're
gonna
bottoming right here.
I think we're gonna need it for years to come. This is pulled back further than I thought it would,
Yeah.
and we took out. This was the break point for me on that trade was
Right.
right here. Whoops.
So you'd probably leave it alone.
I think you need to get back above 205 on this ratio,
Okay.
which is, you know, quite a way away. And at the moment,
Yeah.
the way gold's performing, I don't
Yeah.
see that happening anytime
Yeah.
soon.
How about
But
oil on its own instead of comparing it to the strongest asset in the universe? I mean, what's going to look good against gold?
I thought that was the strongest asset in the universe. I thought those royalties on your guitar playing, Dale. I could be wrong.
So there it is.
There
What
it
do you
is.
think? It's a breakdown, right? It broke down under 64 or 2 and tried to get back.
Yeah, honestly, I don't see it much. I cannot see a world in which oil goes much below 50 unless we have another exogenous event, right? I just don't see it. I mean, ignore this spike low. Maybe I should use the secondary futures.
See, back then you were looking for a big move. Maybe we're going to have it from here.
Yeah.
See how you had that 5 wave coming out there? Maybe the beginning of 2024. Maybe it's going to happen now.
It's a cleaner
Oh,
chart.
you erased it.
It's a cleaner chart if we use the
Okay.
secondary fuse because, you know,
It's
we
all
have the
right. I mean, you know,
COVID stupidity. Look, we've just made a 60. We've just
yeah.
made a. Whoops. I don't know what that is. I've done that the wrong way around. 68%. Yeah. So we've
Yeah.
just made, sorry, a 61.8. That's a fib retracement right there. And I don't see us going much below $50 unless there's some kind of strange event in the world. And what we could have done is we could have just like taken out some weak longs, right, with this move below here.
You need to
Or
get back
we've
above 62 or
yeah,
4 or something.
about 65, I would say.
Yeah.
Back above 65. And you know, that could easily happen, right? If we could have
Yeah.
war in the Middle East, God
Yeah.
forbid. There's so many geopolitical events that can affect oil, but I don't have a strong view at the moment. I think you need to reclaim some ground before you can start getting bullish again.
Let me wrap it with a real cheery question for you, Dale.
Mhm.
All right, so we have a war in Europe with Ukraine and Russia, or call it Eastern Europe. we have a perpetual war in the Middle East with Israel and everyone else. There's theater number 2. And now we're on the verge of the Asian theater opening up with India and Pakistan. In the olden days, didn't they call that World War?
I mean, that is a good philosophical question. And what constitutes a world war? Is it one or two nations against the rest, or is it, the sum of a number of smaller wars around the world?
That's what you had. You had 3 theaters in World War II. Those all through the same theaters of war.
You did, but it was the evil of Axis against the greater good, right? And here, I think you've got.
Well, it could end up that way. Look how they're lining up between
maybe
India and Pakistan,
maybe
and Iran, and I think Russia and China signing all kinds of treaties here in the last 24 hours.
Look,
so anyway,
I think you know my view, right? I've said for a few years now, sadly, that I think within my lifetime, I think there will be some kind of major war, whether that's a civil war, or whether that's, a global conflict. I think it's inevitable, and I think that's a consequence of the political leaders of the world and how the less well-off in society are treated. And I think it's only a question of time before people say we've had enough, right?
we already have the trade war. If it's an embargo, it's an active war. So I mean, it's happening everywhere. Everyone out there that hears this, I just saw the weirdest interview of Paul Tudor Jones on CNBC, and he went to this conference, and he brought up AI and the guys that are developing them. You got to pull that up on CNBC. Paul Tudor Jones talking AIs about a 6-minute clip, and he's not kind of a fringy at all, is he? He calls himself one of the better risk managers in the world. One of the better risk managers. So he doesn't even call himself a trader, he calls himself a risk manager. But check it out. And, it's pretty bizarre. So, Dale, it's always great having you. Thanks for some good looks to look to trade. Not many people present that bullish look for the dollar. Interesting. So, especially being a host, I like to be able to, and a trader, be able to see both sides, both cases, both the bull and the bear case and everything.
I think you have to. I mean,
Yeah.
I think what I would caution is, my views are usually much longer term time frame than the people that you have follow you on your shows.
Yeah.
And also, I tend to look at the world in a relative basis. So just to answer your question at the start of the show, markets got a bit of a thumping in March and April. And we did also have losses during that period of time in our equity book. But we run long short, so we're not totally naked. And so our losses were not, that bad. And we've had a big bounce back. We're up about 14-15% in the last 6 weeks. So I think it's fine. I think the world had a bit of a blip, due to Mr. Hopefully we're developing a little bit of resilience to the nonsense that's coming out of the White House. I think that's what markets do. If you look on an optimistic basis, I think markets climb a wall of worry. They become impervious to the nonsense that's going on around them. I think we did have a big shakeout. I think a lot of leveraged players probably got hurt quite badly. I think the long only guys can, look at the spike in vol that we had as a buying opportunity, and many did. And now I think you have to wait for the waters to become a little less murky. I'm cautiously optimistic. I say 75-80% in the camp of we see new highs, but I think there's still, an element of risk out there because we don't know what Trump's going to do next regarding tariffs in the coming months. So I still think there's an element of risk out there. So just be cautious.
Okay, I think this chart displays it. Even if we have a melt up to 7,500, look at where Dale has wave one labeled. So this is you're much closer to the end of the game. That's what fives are about than you are at the beginning of the game. So even if there is a melt up to 7,500, that could be the end of the party for quite some time. So, you have to keep that in mind too. And you never know if you're going to get that melt up or not. Just be a good risk manager like Paul Tudor Jones and Dale Briscoe and do the right thing today, and tomorrow will take care of itself. I guarantee that.
I
So,
think risk management in this environment is paramount.
yeah.
That and position sizing, right? Just don't be too aggressive.
So I'll talk to you like July, August, Dale.
Yeah, that'd be good. I'll hopefully have some more clarity on where we're going by then.
Okay. Always feel you ever need anything, feel free to give me you know, send me an email.
I will do.
Okay, buddy. So,
Keep up the good work with the show.
all right, thank you, Dale. Dale Briscoe, everybody. Some great looks from Dale. No axe to grind. Just likes to come here and pay it forward. So, that's called wanting to encourage and lift people up. So that's a wrap for me. We'll see everyone tomorrow. It's Friday, right? Okay. TGIF, guys. And don't just count your candlesticks, count your blessings. See everyone tomorrow for TGIF. Thanks again, Dale. Adios.